everyone. Thank you for joining. I think we're going to have a few more people joining over the next minute or two, but there's no reason for me to not begin. By way of introduction, my name is James Eggert. I lead up our tax assurance and risk management team at BDO, which is a bit of a mouthful, but essentially what we do is we assist businesses in helping them manage and improve how they handle their tax operations. So we do everything from responding to legislation such as senior accounting officer and CCO, but we also help a lot of businesses in just enhancing their tax operations. We do that through better tax risk management, looking at efficiencies, looking at processes and controls. We do a bit of internal audit. And what you'll find out today is actually we work with the rest of the BDO tax stream in thinking about how technology and innovation can also improve the way that businesses manage their governance, risk management, and enhance their processes and controls. So very exciting to have you here for an hour and to introduce some excellent speakers. But before I do that, I'll just give a bit of background because it does say that this is part 4. We've had 3 webinars to date about navigating the changing landscape of tax governance and risk management. The first one, oh my goodness, was a few months ago now, I think, and that was all about what it means to be a large business. And so we have a lot of clients that are sort of on that growth journey where all of a sudden they become of interest to HMRC. And so we did a lot on what it means to undertake a business risk review, SEO and CCO. Our second webinar was focused at all businesses about how to better manage tax risk and some of the methodologies and approaches we've seen businesses use on that. The third webinar was very focused on private equity. And today, as you'll see, it's all about technology. And if you do want to access any of the previous webinars, then you can reach out on the Q&A or it should be on the previous invite. So the agenda for today, and it's interesting because we've got a bit of background. So we're going to spend 5 minutes. I'll introduce you to Jason Land in a minute. Jason is a principal in our tax management and automation team. So he does a lot of tax risk work, but also leads in a lot of the area on tax technology. And actually, Jason won the award at LexisNexis with his team for the best tax technology product. So we're very proud of him for that. And we're going to have a little think about how technology is relevant for governance in general. And then we've chosen 3 quite distinct and discrete areas where BDO is supporting our clients in using technology and innovation. The first will be on international travel, and we've got Zoe to present on that. And actually, he's going to talk about operationalizing transfer pricing, thinking about controls and process and governance. And finally, we've got Matt and Chantal to talk about our customs data analytics tool, and we have a little bit of a demo on that. So there's 3 interesting products and areas of innovation to look at. But before we do that, I'm going to hand over to you, Jason, if that's okay, just to set some context.
Perfect. Thanks, James. Hopefully you can hear me. And hopefully you can see me. That seems to be working. Perfect, thanks. So as James said, previous webinars, we've talked about tax governance, tax control frameworks, and tax management generally. But technology underpins everything that we do in relation to tax, whether it be data or it's processing, converting into tax data that's ready for submission, and often those submissions are done electronically. Whether it's effective automation of tax controls, the governance side of technology, whether it's oversight and visibility of what you're doing locally or in terms of your international operations. Technology is key to everything that we do. And the advances we have seen in technology is increasing the need and indeed our reliance upon it. It is possible to outsource some of this to an extent, but as a taxpayer, you're always responsible for your filings. So what are we talking about here on this particular slide? Well, there are 3 options that we've got here, and the way that you leverage them will be dependent on your current state, what you're trying to achieve, what will work most effective for you, and actually what they are like to live with as you go through. There is existing systems, and that's really about maximizing the value to tax that can be leveraged from things that you've already got in place. You've invested in a system, so you should be maximizing your use of it. The second area is around implementing third-party tax solutions. It might be a core piece of technology, like a tax provision system or a corporate income tax software tool, or it could be some type of workflow compliance system to ensure your global tax filings are managed effectively. There are third-party solutions that sit across the entire sort of tax requirements infrastructure, if you like. Or where systems don't fit or work, or data needs to be analysed, transformed, or have a rule set run over it, it might be a specific data wrangling tool that's required, like the Microsoft Power Tools or Alteryx or similar. And in the session today, we've got some concepts that we want to discuss, mainly around those third-party solutions, and that's really where what James was talking about earlier, how they might support you. But we're also going to talk a little bit in terms of in relation to that operational transfer pricing, Pete, about the types of issues that you might need to consider. Thinking about technology where it comes to tax isn't just a nice thing to do. There is likely to be a reliance on what is already in place with core systems, and everybody will be utilising Excel to some extent to manage aspects of data manipulation, data review. But increasingly, data sits in multiple locations, or it isn't easily accessible in a finance system at all. Manual analysis and reporting is less and less an option, and relying on Excel is a danger. It's your best friend, but it's also potentially your worst enemy as our data sets become ever larger and more complex. And there are really some strong options out there in terms of these third-party solutions. Ideally, I wanted in this session to also include something around those data wrangling tools like Alteryx or the Microsoft Power Apps. We just don't have time in this hour to show you our core list of governance and control type applications that support that. But suffice to say, there are some impressive solutions and tools available that are increasingly better value for money, often with elements of AI built into them, which is what we're starting to see now. But the key is to understand how your own tax and technology strategy consider what your current state and needs are, and then selecting and implementing the solution that best meets your needs now, in the medium to long term, including those considerations of the maintenance and management requirements going forward. And with that, I'll hand over to Zoe to talk about the tax governance and international travel piece.
Thank you, Jason. Zoe, if you don't mind, I'm just going to add one more thing because I forgot at the outset, but hopefully everybody has the Q&A button at the bottom. We encourage you just to add some questions as we go along, and we can hopefully answer them in real time during the course of the webinar. I am aware there's three presentations and a demo, and often we sometimes do get to the very last minute before we finish. So do put in some questions as we go. And thank you very much indeed for turning up. So Zoe, over to you.
Thank you, James. So to introduce myself, my name's Zoe Cuthbert and I'm an Associate Director in our Expatriate Tax team, which sits in part of the Global Employee Services team. I've been doing expatriate tax for over 20 years, but have recently moved into a slightly different role, which is very exciting for me, to look into how we're best utilising our technology and innovation and making sure we're working with our clients in the most productive way possible and providing our clients with that technology. So talking of technology, I'm going to show you today, or talk to you today about one of our tools that we can provide to our clients to help you with tracking your internationally mobile employees. So tracking business travel is crucial for several reasons. Firstly, it ensures compliance with global tax reporting requirements, which can avoid penalties and fines, but also accurate tracking ensures precise tax filings, reducing tax risk and managing reputational risk. By maintaining accurate records, businesses can mitigate potential issues, safeguard their reputation, and avoid legal issues, which we have seen happen in the past. If we can move on. The next slide. Sorry. Oh, no, back one, sorry. Thank you. So as you know, if you joined one of our earlier webinars, and James mentioned earlier, SAO and CCO is very important. As a reminder, SAO reporting requirements apply to certain types of companies, specifically large companies with a turnover exceeding 200 million or a balance sheet total exceeding 2 billion. The senior accounting officer is responsible for ensuring that the company maintains accurate tax accounting records, and UK businesses must comply with SAO reporting requirements to avoid penalties. Accurate tracking of business travel of your employees is a key component in fulfilling SAO obligations, if you're part of that. The corporate criminal offence legislation aims to prevent tax evasion by holding companies accountable for their employees' actions. So businesses must take proactive measures to prevent tax evasion, including tracking business travel, ensuring that you know where your employees are and that they're paying the right tax in the right places in relation to that employment income. So tools like QuickTrip can help ensure compliance with the CCO requirements by providing you with accurate data on employee travel. Next slide. The business travel landscape is undergoing significant changes driven by several key trends. First, oh, sorry, next one, sorry. Yeah. No. That's the one. Thank you. The business travel landscape is undergoing significant changes driven by several key trends, as I've detailed here. First, advancements in technology are reshaping how we plan and execute travel, making processes more efficient and accessible. In the past, tracking business travel was someone coming into the office and recording their sign-in and having a sign-in book and tracking that information. Now that we know we can track the travel in more detail, revenues are asking for this information to ensure you are tracking people correctly. Second, there is heightened scrutiny from authorities, which necessitates compliance and transparency in travel practices. And third, evolving legislation can impact travel policies and procedures, requiring businesses to stay informed and adaptable. Lastly, increasing globalization means that companies must navigate a more complex international environment, influencing travel decisions and strategies. Understanding these trends is crucial for organisations to remain competitive and responsive in their travel planning. In the UK, we have the short-term business visitor agreement, which HMRC introduced to allow companies a relaxation of the payroll legislation to withhold tax for any individual visiting the UK, as long as the company submits an annual report to HMRC to confirm that the employer has tracked their travel and the individuals are covered by a double taxation agreement, which exempts their employment income from tax in the UK. We are seeing a lot of other countries now start to require more reporting of travellers, even if they're not ultimately tax due. So don't just assume if they meet the conditions of a double tax treaty, and you've heard about the 183-day rule, it doesn't mean that there isn't necessarily a filing due like there is in the UK. So it's important to know where your individuals are so that you can use this information to help with that filing, depending on the location they're travelling to or from. Next slide. Understanding stakeholder considerations is crucial for the successful implementation of any tool like this. Each group, we've got here payroll, governance, travel, tax, mobility, and IT, and legal, has unique needs and responsibilities that must be addressed. For instance, payroll will focus on processes like withholding shadow payroll and managing per diems, while governance will ensure compliance with corporate legislation and duty of care standards. Travel considerations include expense integration and emergency alerting protocols. Tax implications such as corporate nexus and tax residence are also vital. By recognising these diverse requirements, we can tailor our approach to meet the expectations of all stakeholders effectively. Engaging everyone from early in the process will help with a smoother implementation, as we can address all their needs and/or concerns as early as possible. We see this a lot where we concentrate with the main team that have engaged with us, maybe the mobility team or the tax team. And then later on during implementation, the IT team obviously have lots of questions about the security and data protection. And it then slows the process down by making sure we're having to revisit that and give all that information. So our aim is always to engage all the stakeholders from as early as possible to ensure that smooth implementation. Next slide. So more about our Quick Trip tool. Quick Trip is developed was by our Global Employer Solutions team to track internationally mobile employees. The key features emphasize its user-friendly and design, which alleviates the burden on teams already facing high workloads. As Jason mentioned earlier, rather than relying on Excel and trawling through lines of trip data to work out who's traveled where and when and how often, this tool can better help you interpret that data. The extensive rules-based engine analyzes travel data across various compliance areas, ensuring that organizations can proactively manage risks related to income tax, immigration, and more. QuickTrip features real-time tracking, automated reporting, and integration with tax compliance systems. It helps businesses meet tax reporting requirements by providing accurate and timely data on employee travel. The tool sends automated alerts to remind businesses of upcoming tax reporting deadlines and integrates seamlessly with payroll and tax systems to ensure accurate and efficient reporting. It includes over 6 million algorithms and with the support of BDO specialists in 164 countries. It provides health alerts, visa and immigration issues, social security, taxation alerts, and document production, such as posted worker directives, all of which are essential for maintaining compliance and ensuring the safety of travelling employees. Using QuickTrip improves compliance with tax regulations across different jurisdictions, reducing the risks of penalties and fines, enhances the accuracy of tax filings, and streamlines reporting processes, saving time and resources for businesses. Next slide. So let's dive into how QuickTrip can streamline travel for business travellers. This slide outlines the processes, showing how we tailor the system to fit your needs. Depending on your current setup, we can implement either a pre-booking or a post-booking system. Our goal is to seamlessly link your booking system with QuickTrip. For the pre-booking system, the traveller logs a request in QuickTrip for approval. Once approved, this information flows directly into the travel management company's booking system, allowing the trip to be booked. Alternatively, which is the way most of our clients prefer to work, is the post-booking system. This way, the individual actually traveling doesn't really know much about QuickTrip. They go in and book their travel in a normal way using their travel management company, and details of that booking automatically flow into the QuickTrip tool by setting up APIs between them. We have a number already set up with most of the major travel management companies out there. It's important to note that QuickTrip isn't designed to stop travel. We understand business trips are vital to a business. Instead, it helps manage risk. We start by ensuring budget is appropriate, no first-class booking if economy is only warranted. We also check for security risks at the destination, because the company does also have that duty of care to its employees. Then we move on to the technical side. QuickTrip verifies if the traveller has a right to work in the destination country, if a visa is required, it assesses potential tax or social security implications, and ensures necessary forms like posted worker directive or A1 certificates for social security have been applied for and are received. Our tool helps companies identify permanent establishment risks and develop strategies to mitigate them, such as limiting project length or employee time and in a location. This gives the corporate tax team a bit more peace of mind. Additionally, clients can set up rules to manage or ban travel to certain territories due to potential implications for the company or partnership. We've seen this in a number of our clients where we've done the work and advice for them to determine these places of risk, so that then the rules are built into the platform when people try to book to travel to those countries, and more detailed review is taking place to ensure that business trip really has to happen or limit it if required. QuickTrip is about making the business travel safer and more efficient while ensuring compliance and reducing risks. So the last slide. So in conclusion, tracking business travel is crucial for tax compliance and risk management. It helps prevent penalties, ensure accurate tax filings, and mitigate tax risk. QuickTrip, developed by our Global Employer Solutions team, offers real-time tracking, automated reporting, and seamless integration with payroll and tax systems. Implementing QuickTrip enhances tax compliance, reduces penalties, and improves accuracy of filing and streamlines that reporting process, cutting down all that time of, as I said before, trawling through those business trip details that every individual has provided you at year end, to ensure that you're on top of it during the year and can pick any issues up as they arise. Consider QuickTrip to boost tax efficiency and effectively manage tax risk. The last slide. If anybody is interested in knowing more about QuickTrip, this is the key team that works on the QuickTrip tool, and you'll have details of these slides. So if you want to learn more, please feel free to reach out to any one of us, and we'd be happy to help and talk to you more and give you a demo of the tool if that would be of interest to yourselves. So now I'm going to pass back to transfer pricing team.
Thank you, Zoe. Good morning, everyone. My name is Meenakshi Iyer. I'm a transfer pricing partner at BDO in London. Although I do all sorts of transfer pricing, I deal with lots of transfer pricing issues. One of my key roles in the team is to lead the operational transfer pricing practice at BDO. Now, today I'm going to cover provide an overview of technology that is available for operational transfer pricing purposes. But before I dive into that, I want to talk about what is operational transfer pricing first, so that we level set, and then we will talk about the technology options that are available in this area. Can you go to the next slide, please? So most of my clients tell me that they are compliant with the TP legislation because they have TP policies, they prepare master file, local files, they have benchmarking. What else do they need? But some of these phrases are quite common in their organization, and maybe let's walk through them and think about whether any of you recognize these. We struggle to compile a full list of intercompany transactions for year-end reviews. We use forecasts to establish transfer prices at the beginning of the year, but actual profits or losses fall outside the benchmarked range. We have a simple limited risk distribution model, but several subsidiaries are loss-making. Many heads of tax tell us we actually don't know what's happening there. Transfer pricing is not important for management reporting purposes. Therefore, we do not get support from business finance or IT teams on intercompany queries. We often process net transfer pricing adjustments that create indirect tax or withholding tax issues. We have a very manual transfer pricing calculation process, and every financial controller uses their own version of the spreadsheet to calculate TP charges. If any of these expressions and phrases are familiar to you, then you do need some operational transfer pricing support. Next slide, please. So what is operational transfer pricing? Operational transfer pricing encompasses all components that are critical for accurate implementation of transfer pricing policies at both transactional and entity level. The overarching objective is to align legal entity statutory GAAP financial statements, that is your local GAAP accounts, their outcomes, and tax returns with the arm's length standard. So it's not aligning your group GAAP accounts with just the arm's length standard. You need to make sure that the local GAAP results actually meet the arm's length standard. And what are the key components of this framework? James earlier mentioned that it has 4 key components. So you need to think about the process and the controls that you have. So as an example, does your finance team, which actually does the 3P calculations, does it have a step-by-step guide to do these calculations? What is the data that is being used? Very important. Jason mentioned ultimately it is the data which is available in various systems. That is what we are using to do the calculations. And then that feeds into your profit and loss accounts. Who are the people who are responsible and accountable for operational transfer pricing? Is it just your tax team? Is it your finance team? Is it your local financial controllers? Who is accountable and who is responsible for setting these policies and ensuring that they are calculated accurately and reflected in the local GAAP financial statements? And what technology are you using to do these calculations? Now I will, this wheel in between, shows very clearly that in order to meet, your TP compliance obligations, it's not only important to have transfer pricing documentation. We talked about benchmarking, master file, local file. It's also important that these policies that you have are accurately implemented and are reflected in your accounts. Let's also talk about why, is the timing of getting your transfer pricing right important? You may be aware that in the UK, we have something called the one-way street rule. What it actually says is that if you have not been able to book your transfer pricing adjustments before your accounts were closed and you're trying to do only tax return only based adjustments, then any of these adjustments which reduce your profits or increase your losses are not technically allowed. You probably need to go through a mutual agreement procedure to make sure that there is no double taxation. So in this context, what becomes very important is transfer pricing should not be an afterthought. It has to be a core part of your finance processes so that before your local GAAP financial statements are closed, the transfer pricing adjustments are booked. Now, why is it important? We talked about the one-way street principle and the timing of it. But this data that you have in your accounts actually impacts the data that is included in your master file, your local files, international dealing schedule. Now, UK has just issued a consultation 2 weeks ago and they're planning to introduce something called international control transaction schedule. And you would need to report data with the intercompany transactions, the values of it. And you have to provide more detail on each type of transaction, including financing transactions. Does your group have all of this data available? Because I speak to a lot of clients and many of them tell me that they have all their intercompany is booked in an intercompany account. Now that is the catch-all. But what it doesn't do is, so that if someone asks them to segregate what is the value of intercompany services, what is the value of intercompany intellectual property transactions, they may not be able to quite easily isolate those. So you need a mechanism to do that in order to file this, to include in your international control transaction schedule. If you don't get your transfer pricing implementation right, it affects the data in your submitted tax returns. It affects your tax provisions. I'm sure many of you are familiar that, transfer pricing is a big part of your tax provision. Zoe earlier talked about senior accounting officer obligations. Many of you may be aware that HMRC published something called Guidance for Compliance on Transfer Pricing in September 2024. And for the first time in there, why it is important to get transfer pricing compliance right, they have mentioned that actually, if you don't get your transfer pricing right, you do not really comply with your senior accounting officer obligations. Because the number that the senior accounting officer is signing on the local GAAP accounts, an important aspect of it is getting your transfer pricing right. Then we come to customs duty valuations, VAT and withholding taxes. Everyone is, the hot topic of the day is tariffs. and everyone is worried how the changes in tariffs is going to impact ultimately the end cost to the consumer. But if you had to think about any changes to the customs valuation or the value of the imported goods, one key aspect for you to think about is the transfer pricing aspect. So, for example, is your product price, does it include not only the cost of manufacturing, but does it include embedded services, embedded IP charges? And is it possible for you to potentially isolate these charges separately and agree with the customs authorities that they should not be included as part of your customs valuation? So this is something that many clients are looking at the moment. So operational transfer pricing and getting your TP implementation right has many different impacts, and it's important for you to consider these wider issues when you are thinking about what is the right operational transfer pricing framework and what systems and technology you may think about implementing to support with this. The other thing that many people don't think about is the post-year and transfer pricing adjustments. When you do these adjustments, they do impact your balance sheet values, your stock, your work in progress values. BEPS Pillar 1, Pillar 2, your global income reporting, you need accurate data, and TP implementation is an important aspect of it. And then public CYC, EU has introduced public CYC, and you need to have the confidence that the numbers that you are presenting in public reports are accurate, and getting your transfer pricing implementation right is an important aspect of it. If you go to the next slide, please. So how can we help you in choosing the right technology? I mean, I would probably just first talk about, what is the technology really trying to do? So if we look at the column on the left, the first thing is, having the right technology solution could provide you with more assurance over the outputs, and therefore it will reduce risk. Now, I know at least 100% of my clients rely on spreadsheets. Jason talked about that spreadsheets are your best friend, but they could be your worst enemy. And it's important that even if you are using various types of spreadsheets, that they don't have circular references, other type of errors, breakage in formula, so that you are confident about the outputs that are coming out of these spreadsheets. So at a very minimum, even if you just use spreadsheets, you don't decide to implement any all singing, all dancing solution, you should at least have a tool that helps you in reviewing those spreadsheets. The second thing that you need to think about is, these spreadsheets, as far as when I talk to a lot of my clients on these operational transfer pricing projects, those spreadsheets are very much reliant on the hero mentality. Someone who has designed the spreadsheet is the only person who actually knows how that spreadsheet actually works. But there is this piece about how can technology help you in maintaining and improving that delivery model. How are you getting the data into the spreadsheet? Can you do something there, with some innovative tools like Alteryx, Power BI, Power Query tools to get the right data in the spreadsheet? Can you use some simple macros to get your right outputs, and then have those review tools to check whether the output is correct? What tools can you use to reduce the time taken to perform these tasks? I used to have a client who had massive year-end adjustments, and they used to run this spreadsheet which had lots of macros in it. It was actually a well-designed spreadsheet, but because the volume of data kept increasing, that it used to take them, they used to run these macros overnight, and in the morning when they would come and see those the output, it wouldn't have fully run because the spreadsheet was broken. They will fix it and they will rerun it. So the volume of data these days is so much that maybe just having simple spreadsheet with macros is not enough. But you could maybe use, again, certain types of innovative tools to improve the quality of those calculations and the time it takes to do those calculations and have confidence in the output. And finally, it will reduce cost, and you don't have a cottage industry of people calculating intercompany charges in the finance teams who don't know, why they are doing what they are doing. Are these interdivisional transfer pricing and not UK transfer price is important or not? Think about the latest consultation issued by HMRC. Now, on this note, I will invite Jason to talk to you about the available options, something that Jason has mentioned before. But for transfer pricing, this is no different to any other area of tax. So, Jason, I'll just hand over to you.
Perfect. Thanks, Meenakshi. So, as Meenakshi says, this is no different. So, 3 boxes here on the right of this particular slide are the same as I talked through in the introduction, because that's the best way of looking at how technology can support your tax governance or your tax requirements or your tax transfer pricing. So as a reminder, this is about looking at existing systems and how you can assure or get better visibility over how your transfer pricing transactions are being operationalized. So it might be around implementing specific transfer pricing solutions or the innovation part. So spreadsheets can break, as Meenakshi mentioned, but you might have some sort of data wrangling tool or data analytics tool that extracts that data, runs tests over it or rule sets over it, all to support that right first time approach to your tax governance. So you're starting with those existing systems and thinking about, am I leveraging that? I'm already paying for that existing system. Can that help me? And if not, what else can I do? But the important piece probably to note here is that there's some really good tax modules which sit as part of core finance systems. And sometimes their license costs are bundled with those systems. So the cost to run is negligible once implemented. So if, for instance, you have an Oracle Cloud Finance system, you may well already have access to their transfer pricing module, indeed their tax provision module, their CBCR and their Pillar 2 modules. So thinking about what you currently have or what you currently have access to and the minimum cost to move is a key area. But the starting point has got to be to understand how your tax and technology strategy sits, consider that current state, what your needs are, how comfortable you are with those questions on that previous slide or other areas of operational transfer pricing where you don't have comfort or visibility, etc. And then selecting and implementing the solution that best meets your needs now, in the medium and in the long term, including those considerations of the maintenance and management requirements going forward. Meenakshi, back to you.
Thank you, Jason. Can we move to the next slide, please? Next one, please. So now we will, now that we've set the scene, we will talk to you about a couple of key tools. One is that reducing risk part on your spreadsheet, which we think would be helpful to most of the clients who are listening. So, there are various types of data wrangling, data review tools. And at BDO, we have something called Rainbow Analysis Tool. Now, this tool, it provides confidence over the accuracy, completeness, and integrity of the spreadsheets. So what does it really do? If when we run the tool, it helps you in discovery of any hidden sheets, rows, columns, broken links, intersheet logic. It highlights manual adjustments made to formula or inconsistent formulae. It identifies circular references. It compares two spreadsheets, various version control issues that we always have with spreadsheets and Word documents. So it would help you in identifying those. And it might help with some random or systemic sampling of data for further testing. So this tool we use in many of our operational transfer pricing projects, because first off, many clients tell us we already have something. Can you first look at it? How, is it fit for purpose? Can I make some improvements? And one thing we do is we use this tool to review their existing spreadsheets, find what the issues are, and then we tried to improve those spreadsheets by building in better controls, working with our modeling team. Sometimes if Excel is the only thing that a client wants to use, we can still support you in making it better than what it is currently. Jason, why don't you talk about the key features of this rainbow analysis tool? What is the technology aspect of it?
Thanks, Meenakshi. It's me again. Okay, so it's probably, I mean, you've covered off pretty concisely what it's looking to do. I think probably the only thing to add is that these spreadsheets that we've seen, as Meenakshi says, may have broken links, they may have hidden sheets, but realistically, the danger is that people move on within businesses. You know, they get promoted, they might move to a different role or move organization, and you find we talk to finance teams and tax teams consistently who are using spreadsheets that have been handed down. Those spreadsheets might be 3, 5, 6, or even 10 years old. They're created by somebody who's no longer in the business, and heads of tax have said to me, "Well, I feel like I don't know it's right, but I don't know how wrong it is." And so I think this tool is really useful as you look to refine rather than transform what you're doing. It's kind of that initial starting point to say, how wrong, how much danger does this process, this technology, this way of operationalizing my transfer pricing, how much risk is that posing to me, and what do I need to do in terms of next steps?
Great.
Thanks, Meenakshi.
Thank you, Jason. If we move on to the next slide, please. Now, this is a slide which just provides you an overview of what is it that you're trying to achieve, something that James and Jason earlier touched on. For transfer pricing, it is no different. Basically, it is a data to deliverable model. On the left-hand side, you have various sources of data. So for transfer pricing, you have data in the GL. It might be part of your planning modules. You might have some HR payroll data. It might be the data might be sitting in some data lake or database. Then the question is, like, what do you do with this data to get it to do that spreadsheet does the calculation, or to any other TP technology solution, which is, some of them are named in the third column. The second column is where the data engineering part sits, which is, you can use any of these data wrangling tools like Alteryx, Power Query, Power Automate, any of these tools to transform this data into the right modules that you need, and then and in the correct format, which can then feed into these TP technology solutions, which we will talk about, what are the various options available in the next slide. And that would then provide you with the deliverables that you need. And what are those deliverables for transfer pricing purposes? They are the invoices, the journal entry, segmented P&L, to make sure that you are able to prove your transfer pricing is right on a functional basis, and everything else that you need. For example, the data that you would provide, including the international control transaction schedule. So if we now move on to the next slide, please. So this slide just talks to you. It's just it gives you. This is not an exhaustive list, but it gives you the various tools that are available in the market, which is where you have a choice. And Jason mentioned, you have a choice of existing systems, which are mostly sitting on the right-hand side of this, where, for example, you may have Oracle PCMCS, which is used for doing cost allocation. If you already use Oracle, and you may already be paying a license fee for that, that might be the right module to actually automate your management service charges or regional service charges, rather than trying to find a specific transfer pricing only solution. On the left-hand side, we've got Excel, which is the most common tool we've already talked about. But then you have in between, you have the enhanced desktop queries. You can use some of those innovative tools to do the calculations, or you can look at some of the established TP engines or emerging solutions such as Longview, EXA, AG, Optravis, or some of the solutions like IBEDIA, Anaplan, OneStream, all of them, the emerging solutions very much are the standard financial reporting solutions, but they can be tailored to do the TP calculations, because ultimately all of that feeds into the local entity's profit and loss account. So these are the various options available, and what option is right for you is what you need to think about, based on the various criteria Jason had mentioned before. And how do we help clients in assessing what is the right solution? We'll just talk you through some of the steps in the next page. Can we go to the next slide, please? So everything starts with the current state assessment. And Jason, why don't you talk through the 3 steps that we have, and I can talk to you about some of the example considerations that we review.
Perfect. Thanks, Meenakshi. So they say that if you want people to remember something, you need to tell them 3 times. So this should be the takeaway from today's session for most, I would guess, because here we're talking about that current state assessment, or technology lab, which is how we help our clients rapidly assess their current state, understand what systems or options might best support their needs, see those options back to back without the pressure of a vendor being in the room, and really get to grips with what would work best for them. So over a 2 half-day sessions, we analyze the current state. We have a workshop to say, what do you currently do? How does that work? What are the sticking blocks? What would you like to change? What are your requirements? And we analyze that current state in conjunction with the client, really listening to what the drivers, the needs, and those requirements are. And from that, we can generally shortlist around 3 sort of best fit solutions. So taking that exhaustive list from Meenakshi's last slide and saying, what are the ones that could potentially fit your needs? And then we get those on screen in the second part of the session and really drill into the functionality, showing what works really well, why we like a particular solution and why we think it might be applicable, but also where one might have a limitation for a particular circumstance. We really dig into that as well. How important is this element for you? What does this look like? How would this manage this particular factor that's critical for you? And that allows, without vendors being in the room, to have a really critical analysis and hands-on of looking at these systems, to really do one of these rapid vendor selections, essentially. And the output is a project charter, setting out the challenge, the key requirements, the options considered, and then scoring. And this is the really important bit, scoring each solution against the client requirements, what they've told us is important for them, across around 25 different parameters, really helping their clients to understand what will work best for them and how best to manage those.
Both, I need to stop you because we do need to move on to Matt's, because he's doing a demo on customs. So final few words, please.
Yeah, if we go to the next slide, please, can we move on to the next slide? I will just do the key takeaways now. Next slide, please. Yeah. So thanks, James. Thanks, Jason. I think what the key takeaways I would say are, just having TP policies, master file, local file is not enough. You need to have a robust operational transfer pricing framework, which provides assurance that the TP policies have been implemented correctly to ensure that you are compliant with TP legislation. The key components are process controls, data, people, and technology. Now, choosing and implementing the right technology solution, it reduces your inquiry risk and penalties. It improves accuracy of the filings and helps you meet important statutory obligations such as SAO. If you want to know more about it, we will be sharing our operational transfer pricing brochure along with the follow-up, and you can contact me. Thank you. And I'll hand over to Matt now.
Thanks very much, Meenakshi. So I'm very quickly going to run everyone through the customs data analytics tool, and we're going to do a quick demo that Chantal is going to help out with. So basically, the customs data analytics tool is a proprietary tool that we've built which analyzes import and export data that is obtained directly from HMRC for a business that imports and exports out of the UK. So any business that imports and exports, I think, as everyone said in the previous presentations, a lot of people are still using Excel, and it's really, really difficult. Trade data has like 60, 70 pieces of data for each customs declaration. Each customs declaration is a tax return, and trying to analyze that data with Excel is nigh on impossible, especially because the HMRC raw data just gives you particular codes and you don't understand the meanings beneath it unless you're a true customs specialist that's been doing this for a really, really long time. So what we've done is we've built a tool that makes it really visually easy to understand your import and export data. And that's what we've done. To analyze import and export data, it costs £1,000 a month. To do just imports, £750. And one of the key messages on this slide is that you can outsource the completion of your customs declaration to a customs broker. And indeed, 90% of businesses that import into the UK do so, but you can't outsource your compliance risk. It still sits with you, regardless whether you've got someone else filling out your customs declaration or not. So we just move on to the next slide. So what are the benefits of our tool? Well, one of the big things that we've done with this tool is we've actually provided it through the BDO portal, which is quite a significant groundbreaker for us. It provides 24/7 access to all of your staff. So you just ask us which staff needs access to the tool, we provide them with that access, and they can go in and use it 24/7. So it can be used out of hours for like logistics, shipping departments, procurement teams, trading teams. It works for all of them. It's really easy to understand visual data, which Chantel will show you through. You can drill down from a group level. So you look at your group's data, and then you can go down to individual companies within that group, or even divisions if required. It really does help from an SAO perspective. One of the main things that I get called in for from a customs and an excise perspective is that businesses can't prove that they have adequate controls and due diligence around their international trade profile. And this tool really helps with that. It does do some of the newer taxes as well. It will identify CBAM, so carbon border adjustment mechanism exports from the UK into the EU. So that's something that we've done. And it can identify potential reliefs that you're not using to lower the customs duty payable into the UK and save you money. It also helps you monitor the performance of your customs brokers and freight agents. So moving on to the next slide. So just a couple of quick case studies. I'm just going to pick some bits out of this. One thing we have noticed with the tool since we started putting BDO clients on this is it normally pays for itself very quickly. One of the clients that we reviewed recently, on the first time we used the tool, we reviewed 3 years worth of historic data because that's the reclaim period for most reclaim opportunities. And we identified a 60k reclaim that's paid for the tool for the next 5 years for them. We have used it in relation to SAO infringements or where businesses have been told by HMRC you really need to improve. We've deployed the tool for them from an international trade perspective, and it's actually helped improve their risk rating from a customs perspective. One of the things that we've also used to link in with Benacci in the operational transfer pricing is that we can use our tool to help calculate where there is a true-up adjustment for a profit after a TP period, and that allocates to the sale of the goods going into the UK. We can actually use the tool to calculate the upshift or downshift in the landed cost for a reclaim or a prospective additional payment to HMRC, and it works it against each import on a pounds and pence basis. So it's a really great tool to kind of give to HMRC to work out those reclaims and overpayments. What I'm going to do at this point, though, I'm going to stop. I have seen one question there in the chat. Is CDAT data real time? CDAT data isn't real time because you have to get the import and export data from HMRC after the month end. So we typically get availability to request that data from HMRC on the 10th day following the previous month, and then we can analyze the previous month's imports or exports. We can link it into particular systems, so like SAP, the GTS system, or Oracle Global Trade, but then it's pulling your import and export data direct from your system, so it won't necessarily be exactly what's been submitted on your behalf to HMRC, but it is something that we can play around with. So I'm just going to pass over to Chantal, and I know we are slightly running out of time. So I'm hoping that we can just do a very quick demo for Chantal, if you want to present the tool and just demo it for a minute.
Thank you. Can you see this tool now? Yep.
Perfect, Chantal.
Perfect. So this is our data analytics tool, and as Matt said, this is based on your customs HMRC CDS data or MSS data. We've designed it for use for staff across the business, so for senior management and then also for staff in logistics, procurement, finance, and each of the different dashboards kind of focuses in on different areas. We've got some headline data that can be used to spot, give you kind of a holistic overview of your imports and exports, and then also spot opportunities and key risks, which can be really helpful for senior management to focus, and also for the staff who are kind of working on a day-to-day basis with customs movements to then go and look at particular risks highlighted. We can filter the tool and kind of play around with all of the data, and you can also export the data to the tables that we've developed within the tool. So that can then be used by staff to go and look at specific entries that have been made to HMRC.
And one of the things, Chantal, that we do is we enhance the data that we get from HMRC using an API feed. Because, for example, when you're looking at the original MSS data, you'll just see the commodity code, which is a 10-digit numerical code, but it won't tell you what an item actually is. So the tool does things like it pulls through descriptions. When there's like origin codes and you're using preference, it will tell you what treaty is being used, on what basis you're claiming preference. And in the original data, it's just a series of numerical codes, isn't it? So it's very difficult to understand, which is why a lot of people are finding great value in using the tool.
Exactly, yes. And the API that we use, so we use HMRC's API tables. They're updated on a monthly basis, so that can help businesses make sure that they stay up to date with any changes to customs data and customs rules that HMRC have rolled out. So this kind of is a easy way to make sure that your staff are staying up to date with any changes to things like your commodity codes, but also other areas like licenses and quota requirements. So it feeds through in different areas that kind of impact your overall customs liability. One other thing that we can do with the tool is we can link in clients' supply chain profiles, so then you can use it to validate your import and export data against your ERP data, so that can be an option. And then finally, we also work with businesses to develop additional dashboards if you work with more risky kind of supply chains, so things like you use inward processing. We can help you link this data to your ERP data and then help to produce things like your bills of discharge, and then also things like your CBAM, as Matt mentioned, and quotas and licenses to help you control those within this tool.
So I think that was possibly, Chantal, the fastest demo that we've ever done on this tool. So look, thanks very much for that. I think it's just to give people a taste of what it looks like and the interactivity of it, and visually it's very easy to understand. That's often why we get a lot of kind of board members or heads of departments using the tool, because then it's easy to understand the data rather than the raw data that you receive direct from HMRC. So what I'll do there is I'm going to close up the call. Got one more question. Can CDAT tool be set up for other jurisdictions? Yes, it can, and we can link into the tools that other BDO member firms offer, which we've done with the US, and we can do with Ireland, for example. It depends whether you can get the actual data from the customs authority. So some of the EU customs authorities don't actually provide the data, unfortunately, which makes it harder. But what I would say is, just to finish up, that if anyone is interested in any of the tools that have been put forward today from Zoe, Meenakshi, or Jason, then please do just get in touch with us all. We'd be very happy to demo any of the tools and answer any additional questions that you've got, because I know we slightly run out of time from the Q&A. So it just leaves me to say thank you all very much for attending. It's great to be able to present at these events, and hopefully we will catch you on the next webinar. Thank you very much.